Friday, September 21st, market levels report. Have some interesting setups here in Euro. We did have Euro trade down into the 2920s area, and we continued to expand the downside delta volume distribution. So the delta volume distribution kept getting expanded to the downside. That's a product of newly initiated sellers willing to continue to sell into an instrument. Now from this point going forward off the 29.28 area, it looks like right in that area, the Euro's had a bounce here. Very typical. I've talked about this before as the Euro has gone to extreme out of balance, meaning there's everybody short, hardly anybody long. It's very common then for instruments to bounce. We have had some bounce. We've had lift here on very light buying. So very light buying, market lifts. Those buyers let go. Market settles back some. But notice now the market's higher than before, even though we've just let go of recent buyers and have gone back to completely out of balance open interest. That is called a hidden divergence. So we now have the delta volume distribution slightly lower, price higher. Markets tend to bounce out of that supply and demand event. We have another major inventory grab where the market goes completely out of balance and we bounce again. And what's happening too is, why is the market going up so easily? Well, there's a lack of willingness by participants to be on the offer side with limits. So smart money doesn't want to be on the offer side with limits when they know the market's out of balance. So very light amounts of buying into a thin order book can very easily lift price in a linear fashion. Bounced again, and then sellers have come right back in. The expanding delta volume distribution is telling me there's a willingness now to keep selling into the Eurodollar, which was a little different than before. We kept rallying and rallying and rallying. Now it's kind of like the big money cashed out into the big rally we had the other week, and now the coin has flipped, and we seem to be more, we have a large liquidity participants more emboldened to sell into the Eurodollar. So anyhow, the Euro now is trading higher than it was before. We just had some extension of the delta volume distribution again, and we're getting a little bit of a bounce, a little bit of buying. So the Euro's lifted here off the 2970s area out of another completely out of balance open interest situation. So every time Euro goes completely out of balance, it bounces. Completely out of balance, bounces. Completely out of balance, bounces. Completely out of balance, bounces. A lot of newly initiated sellers building up down in this area price. Another thing that shows me that sellers are now more emboldened and they're selling into the Euro is we do have sellers holding inventory off this 3080s level. And even though the Euro has been rallying here, we've had sellers that had originally sold this 2990s area. They're continuing to hold that short inventory or portions of it into these rallies higher. They've sold into this rally, and then the market traded back below the cost basis of their selling. So they're able to adjust their cost basis higher for the held short positions that they're maintaining. Market rallies above this level, they sell into it again. The market pulls down below this pricing level, and they're able to then wash out or adjust their cost basis. So smart money participants that are selling the Euro in the CME FX 6E instrument have had multiple opportunities now to adjust the cost basis for the short inventory they first started accumulating in this area price. That cost basis is actually now higher. So originally selling Euro around the 3000s level, their cost basis now is probably closer to the 3030s to the 3040s area. Because both pullbacks, both times, have traded below the previous pivot highs where they were sellers. So that's how smart money, they constantly adjust, or they attempt to always keep adjusting the cost basis of the held open interest that they're carrying in these contracts. Right now, not surprised we're seeing a bounce in Euro because the Euro just expanded its delta volume distributional range, and now it's bouncing again. So here right now in euro, we have the euro about, 90 some, 95, 96% short, and very small amount of percentage are holding long positions. And that's what the euro has done so far. Very dramatic sell-off from the 31.80s, and we've been able to go down to as low as the 29.20s. But now I'm starting to see evidence that the selling that's been coming into the euro is now no longer able to get the euro to trade to lower pricing levels. So now I'm showing that the selling that's coming into the euro is not as effective at getting the euro to trade lower as it was in previous phases of the selling and delta volume distribution. A lot of times when this happens, this is a little bit of a rounding out pattern. We might get some rally mode again on euro. We'll have to see. Remember, if any catalyst hits that's favorable to the euro or negative to the dollar and causes people to shift to the euro, there's a whole bunch of short inventory that could start unwinding. So the path of least resistance for a covering move is short covering. There's not a lot of long inventory to cover or liquidate. So I hope you understand that concept. Where there's supply is where the market's easiest to move into. The market's easiest to move up here because that's where all the supply is. All the supply is holding short inventory. So we're sitting here just above the 3,000 level in the euro. We're sitting in a hidden divergence environment right out of a major inventory grab or extreme out of balance open interest. Okay, real quick look. Let's take a quick look at the ES. ES, again, kept going, expanding its delta volume distributional range, was barely able to trade lower, and path of least resistance when the market's completely out of balance. Everybody's holding short inventory and hardly anybody's long. Any little catalyst that comes in, like the euro, what's the euro been doing? It's been making higher pivot lows and holding and bouncing up off of its recent lows. Now we're getting buying back in some equities markets, and we're getting a bounce now in the indexes. So as Eurodollar goes back up a bit, US dollar goes down, we get equities back in doing some buying. We have ES here rallied off the 1443s area out of extreme out of balance open interest. A little bit of selling here later in the day, pulled back a bit, but we got new buyers in, new short covering and buyers in off the 1448s. Right here in the end of the day, we got a little bit of buying, some short covering into the 1451s level, and sellers that have been holding inventory here off the 1459s area. There's just a little bit of that inventory still holding, even though the market's traded up to this level and has been challenging it a bit. So actually, this is our new 1460s area pricing level that all this last inventory is tied to. So the sellers that first started selling this 1459s are holding just a little bit of that short inventory still, and that inventory now is tied to the highest price achieved since these sellers have sold the market. They're showing a willingness to keep holding some of this inventory even though we've traded to the 1460s area. So that is our slight overhead inventory resistance. And then above that, we do have our highest levels of held inventory still tied to this 1468s area. So actually, this level right here, this is actually a dead level. There's no sign or no evidence of any short inventory holding off that level. We had sellers holding inventory off that level. When Delta came up here and tagged that level, that showed me anybody that sold that area from before had unwound. Then we had brand new selling come in this area price, 1459s. That inventory held, the market traded lower, into major inventory grab, extreme open interest out of balance. Since then we bounced, and you can now see that the ES is coming back up into its range. And right now I'd say we're about 55-60% of those holding open interest, holding positions are long, and about 40-some% are holding short. So this is actually a market right now that's very close to being in balance, meaning we have just about as many participants holding long positions as we do short. So that this market is what I would call definitely in balance. it could just as easily go up as it could go down just from either long liquidation or from short covering. So we're not at one edge of the delta volume distribution or the other. So overhead resistance right now, we have a little bit of short inventory holding off the 1460s. And then the next real area of held inventory is up here, up here as we get up to the 1468s. A couple new levels of long inventory just below current trading price, and then our lowest held off the, 1443s. And that is the situation in the ES. ES is going to be all about what does equities do today. If equities is a buyer, then we could easily come up here on some short covering. If equities goes into some selling, then we'll probably come right back down, start working into testing these two levels of long inventory support below current price. And that is where the market is for the S&P 500 E-mini index this Friday.